All right, let's take a look here at some detail at the trading day ahead, as Ashley and I are joined again by Monty Guild, the CEO of Guild Investment Management in L.A. You know, Monty, today, for what it's worth, is the start of earnings season. What do you expect from this particular earnings season? Seems like maybe the expectation's been lowered to some degree. Are companies going to be able to jump over the bar, or just the opposite?
We think that companies will meet the expectations, not exceed them by much. Everyone's into a cost-cutting mode, and since top lines are not growing anywhere, cost-cutting is how people are showing profitability, and we think that'll continue. We think it'll be a reasonably good earnings season, but we're not very sanguine about the stock market, thinking it'll go sideways to lower. Sideways to lower.
You know, it's interesting, Ashley, right, to get these people have different views on what this earnings season will hold, but as you know, as Monty says, the cost-cutting theme is probably one that'll hold up no matter what.
Yeah, absolutely. In fact, I wanted to ask Monty about, Alcoa, traditionally a bellwether company for how the economy as a whole is doing. But my question to Monty is maybe a UPS or a FedEx might be a better indicator of where the economy stands right now. I want to know what he thinks about that.
Well, clearly, I agree with you, Ashley. The deep cyclicals like Alcoa are going to be under pressure for a number of years longer. Of course, the stocks may rally up and down, but with slow economic growth in Europe and the U.S. over the next 4 or 5 years as a result of the banking crisis, I don't see the deep cyclicals doing very well as a group.
All right. So it is. Do you avoid that? You talk about deep cyclicals in general, like and an Alcoa company obviously dependent on commodity prices, which have been so much in focus this week. What do you make of stocks, generally speaking, that are affiliated with commodities in one way, shape, or form?
Well, we like oil-based because we think oil is a diminishing commodity. It's not as available as it once was, and it's expensive to get these days. So once oil gets to $55, we're going to be buyers.
All right, so you think it's going down that far?
Yes, we think it could get to 53 to 57 at the bottom. And in terms of other commodities like, say, aluminum, we're not nearly as bullish.
Well, the aluminum prices have been falling so much anyway, so you do have to make that separation, it would seem. All right, Monty, it's interesting. You started this morning, I think, at 2 a.m. L.A. time. I started at 5. Ashley's the only one with the banker's hours. So 9 or 10 o'clock, it's easy. No wonder he looks so good,
Don't be jealous. Don't be jealous.
Well, since you made it through the show, Monty, we appreciate you coming on from L.A. We'll do it again, hopefully, sometime down the line, okay?
Thank you so much, gentlemen. I've enjoyed it.